had that dream again. My small business needs to hire, but I don't use LinkedIn, and I hire wrong. So then I'm doing IT, and when I go to plug the servers in, they become sentient, and they won't let us access our network unless we forward their chain emails and memes to more and more and more people, and then I wake up.
Don't let hiring nightmares ruin your dreams. LinkedIn Jobs' new AI assistant finds and invites best fit candidates to apply, so you can discover talent you may have missed. Post your job for free at linkedin.com/quality. Start hiring today with LinkedIn.
Hey folks, welcome to Fintech Insider Insights. I'm David Brear, Group CEO at 11FS, and today we're going to be diving into the big question that we've been thinking about a lot lately. Is AI going to supercharge digital riches? If you're a long-time listener of the show and follow 11FS, you've probably heard us talk about digital riches a lot. It's our framework. It's how we define where we really see the direction of travel for the future of financial services and its journey to becoming truly digital. We see this as an evolution of banking to really meet the customer's needs at the point of them needing them, and the services that are in real-time, intelligent, and event-driven, keeping an eye on what is happening with the client's financial system and ultimately helping clients get the goals and financial life that they really, really want. The framework is an acronym where RICHES stands for real-time, intelligent, contextual, human, extendable, and social. We'll break down these as we go, so no need to take notes, everybody. And now I'm really excited to bring RICHES into 2026 and look at the impact that AI could have on this framework and the opportunity to really supercharge products and services and really fundamentally change the fabric of financial services. To discuss this today, we've brought together an absolute superstar panel thinking to unpack what AI has an impact on the impact for riches as general and customer experience more broadly. We're looking at product design, we're looking at risk and resilience, and really what it means to be truly digital in 2026 and beyond. First up, we have Ross Gallagher, Head of Consulting at 11FS. How's it going, Ross? First few days back in the office, sit down and have a nice chat. It can't be too bad, can it?
No, it's great. And what a great panel to be a part of, and what an interesting topic to sort of kick us off in terms of recordings for the new year. So, Happy New Year.
Well, it's a good one to see if our brains still work or not.
Exactly.
I think mine's mostly cheese at this point, so we'll see what happens. But how's your start to the year been?
Yeah, busy as ever. I think it's going to be a really interesting year, I think in no small part due to some of the things that we're going to talk about today as well. So I'm really looking forward to diving into the topic and sort of, discussing it.
Very good. All right. Also, we have joining us Fernanda Dobal, who is the product director at Cleo. Welcome back to the show, Fernanda. How are you doing?
I'm great, thanks.
Good. Tell us a little bit more about yourself and tell us a little bit more about your role.
Sure. I'm product director for Chat and AI at Cleo, and I've spent the last 10 years or so building behavior change products, D2C, so education, healthcare, and fintech. The last year and a half here at Cleo, focusing on building our AI financial assistant.
Very, very cool. And it's first few days back in the office for you as well. How's those trips into the office been?
Getting back on the bicycle, literally, and into the cold, but it's been okay.
Yeah, it's crazy. For everybody listening to this, London, the UK, snow, weird. It was -8 when I got up this morning. Who would have thought it? But anyway, all right. And next we have a welcome return to the show, Megan Caywood, CEO and co-founder of Caywood.io. How's it going, Megan?
Yeah, it's really good. Thanks for having me on. As usual, love being back.
It is always a pleasure to have you on. You're in the mix of this as well, founding a business based on AI. This is a topic sort of very close to your heart, I imagine.
Yeah, absolutely. I mean, my entire career has been in financial technology, and I think AI is the next big wave of transformation within, every industry, but this space included. So it's really good to be working on it from the point of a startup, because as much as I love working in startups as well as big corporates, it's a bit faster and exciting to, innovate from the startup angle. So yeah, it's a lot of fun.
100%, yeah. How's the start to the year gone? Have you managed to get yourself back into a sort of a work routine?
No, my husband and I took a full 2 weeks off. So today is both of our first days back. So yesterday I had a girls' day with my daughter in London because she just starts back at school today. So we went to afternoon tea and to see the Nutcracker. So yeah, I have not been working at all, but it's been really pleasant. So that's good.
Afternoon tea and the Nutcracker suite. I believe you're more British than I am at this stage, Megan.
I really am, yeah, because I have my citizenship now. So when everyone asks me, like, where are you from? I'm like, England. They're like, no, really? I'm like, no, I'm a citizen.
Well, we're going to have to work on that accent a little bit, Megan, but then...
yeah.
Well, great to have you on. All right, everybody, that is our panel. Listeners, settle in and let's get into this one because A, we're all just excited to chat to each other, so this might run really long, but B, it's going to be absolutely essential listening. All right, so if we maybe dive in and explore a little bit more in terms of where the AI can actually have an impact across all of those things. So like we said, riches for us is about being real time. It's about being intelligent. The intelligence of using all the information, the data that people have, is using context. It's the context of where somebody is or what time of day it is or anything else that we know about it. It's the human part of it. It is about talking to people like people or talking to people in the way that they want to be engaged with. It's extendable. It's taking the information, taking the services to where they are. And then fundamentally, it's social. And when we say social, we don't mean look at what I've just bought, posting it onto LinkedIn or whatever. It is about money fundamentally being a social construct in terms of actually how those things work. So I guess maybe starting from the top then, real time, this is a fundamental in a digital age, isn't it? Where previously where we've looked at old systems in many organizations that I'm sure all of us have worked at, overnight batches with the sort of raison d'etre and actually the idea of doing anything in real time is sort of a bit of a flight of fantasy. That was not too long ago. I don't think I'm sort of speaking out of turn when I say that's where most organizations are today. But I guess starting with you, Ross, I mean, what do you think? How does AI have an impact on the ability to work in real time?
I think potentially huge, right? And I think look, there's the danger that I think we all sit here and we sort of wax lyrical about, how AI is going to fundamentally transform everything that we do. And I think absolutely it has the potential to do that, at least purely from a technology perspective, obviously looking across lots of different sort of siloed databases, which we know is a problem in financial services, being able to pull out the salient points, being able to surface those at the right time, in the right way. I think truly there's a transformational potential there. I think if I step back a little bit, I love the riches framework because it sort of makes it quite tangible to almost understand where you're at. Even if I just put AI to one side for a second, sort of in a digital context, moving away from that sort of analog world, I think one of the things that we would need to see in order to actually fully sort of realize the potential, not only of AI, but sort of digital as well in terms of building on that, is a really sort of progressive approach to how you sort of embrace it, how you sort of roll it out, and, making sure that what we're talking about is using AI in a way that is additive, that creates a richer experience for customers, isn't something like some of how we've seen maybe digital rolled out, which has just been a sort of cost-cutting exercise and maybe a diminished experience for customers.
Yeah. And I guess, Megan, I mean, roll your brain back to the days at Starling. I mean, you guys and Monzo were some of the first to roll out things like real-time push notifications, and the impact that has on people's experiences by being engaged in real time with their financial services is fundamental, isn't it? No longer is the statement something somebody sort of dusts off and looks at on a Sunday afternoon, but actually you're being engaged in real time with your finances as they're happening, right?
Yeah, absolutely. I think, if we roll back to like 2016 when Monzo and Starling and everyone were first coming to market, our main focus was exactly that. Like, how easy can you make it? I mean, actually, even when I was in San Francisco at Intuit, we would have this vision of like time to pie in less than 5 minutes. Like, I don't know how we came up with time to pie as a saying, but everything was like, how fast can you make onboarding while not losing customer trust effectively? So they know it's like the full experience they need. So it's like, you look at onboarding, you look at payments, you look at, downloading statements and, whatever it is that you need to do, just make it as quick and as frictionless as possible. That was like the goal. So real time. I think the interesting thing with AI is that real time is still absolutely a fundamental goal of what it can achieve. but it's no longer just about informing, it's about acting. It's the execution of it, the agentic side. So now it's not just how quickly can you open an account. It's like how intelligent can it be about understanding what you need, which account you need to to open and access, and actually doing it for you. And so that's the real shift that we get now is it's not just as quick as it can be from a manual perspective. It's how much it can be delegated to the AI to make it a better process end to end.
Yeah. And I'd say that probably plays into the work that you've been doing, Fernanda, in terms of all the work that you've done with Cleo. I mean, a big part of real time is that you're allowing people to engage with, back in the day of bank branches being open from 9 till 3 and never when you need them, and all call centers open to a certain time. Actually, chat interfaces and being able to engage with things, doesn't matter if it's 3 a.m. or 3 p.m. Then actually the quality of service, the real time experience, can be fitted around how the customer wants to engage, right?
Exactly. And I think what's really interesting is with AI, you have not just access to what's just happened, but you're predicting patterns on what's about to happen, right? So it can be something as basic as this recurring bill's about to drop. Let's make sure you have enough in your account, to something more complex and behavioral. Maybe you spend too much on Deliveroo's the last 3 Sundays. Let's talk about whether we want this Sunday to be the same or whether we want to put that money somewhere else. And we find that really exciting potential.
Yeah. And I guess connected to that is the second one is intelligence, because actually the only way you can do that, we've all had these experiences with our banks of, phoning up and, 50 different pieces of information, and then realizing the person you're talking to can't deal with the business bit that you've got as well. And potentially they've got to hand you over to another department to do that. It's like, actually, they don't use all of the information. They don't have that, confidence to give you in the way that you described it, Megan, around giving people that balance between efficiency and trust, the confidence that they're there to support you. So, using that intelligence is like a building block of, I think you hit the nail on the head, Megan, trust, isn't it?
Mm-hmm. Yeah, absolutely. I think one of the key things about AI really is that trust and the guardrails that you build in, because it's not just about making a fast decision and making things faster, but about making the right decisions and the best possible decisions. And that's where it's always been about trust, no matter what, when it comes to speed and financial services. Like, I remember one of the first onboarding experiences I worked on was for QuickBooks Payroll, but it was really funny when you took out everything you absolutely had to have in order to just make it the most seamless, fast experience. And we had just as much attrition in the conversion funnel as the long experience. And when we asked people why, they're like, it's because I know you need to ask my social security number and you didn't. So even for QuickBooks, like this esteemed, multi-decade-old company, people lose trust. So similarly with AI, I think it's not just about I want speed of execution and you to help me understand what I need to be able to access it in real time. It's I need to have confidence that you're making good decisions and right decisions. And then I can trust you based off the policies and guardrails that I know we have in place.
Yeah. Yeah. It's interesting, isn't it? When you sort of look at those first two, Ross, I mean, every big, and Megan, you touched on this a little bit about why potentially it's easier sometimes to do these things from scratch rather than from, within a gigantic incumbent. I mean, building out real-time systems, having an event-driven architecture, and then you consolidating and structuring your data in a way that you can use all of that intelligence. I mean, I'll come back in 10 years and see if you finished. You know what I mean? It's an interesting dilemma there, isn't it? Because they're two gigantic transformation programs in any bank anywhere around the world, aren't they?
Yeah, no, absolutely. I mean, and, fundamentally what we're talking about right now is legacy, right? I think you're talking about legacy technology. I think you're talking about legacy sort of organizational structures. Really interesting, though, Megan, something that maybe I hadn't thought about on quite the same level until you said it just now, was the sort of legacy that surrounds customer perception. And when they're thinking about, all right, well, what should this journey look like? And I have a process roughly mapped out in my head because I've gone through this sort of process before. And actually, okay, they didn't ask me for these couple of key points of information. And so I don't know if I really trust this process and I'm going to sort of drop off. That for me is a really interesting angle here. And so if you go back to I suppose the sort of intelligent, the contextual, well then, how do you, I suppose, sort of frame that journey for customers, give them the information that they need that sort of sits alongside the question and what you're asking for and what you're not asking for, so that it gives them that confidence and starts to build trust throughout that journey?
Yeah, because I think something that's interesting just to add on to that, when we talk about legacy, when I first went into working at Barclays, my mindset was really around the technology and user experience, the legacy technology. The thing that really needed to shift in my perception was like the legacy ways of working and frameworks and like just, compliance documents that we had for how things had to happen. You have to shift like both the what and the how concurrently. And that's why I think larger, more established financial institutions could be so difficult to shift because they have to shift so many things. It's not just the tech. It's also the way that they have a relationship with the regulator and what they promise they're going to do and how they're going to do it and how many people agree that we're not going to do it differently and we can capture less and do it and communicate it differently. So it's a really, neat problem to solve.
100% with that. Yeah. I always refer to it as the Bananarama principle. It's not what you do, it's the way that you do it, right? So the way that anybody does anything is usually what results in the outcome, and actually getting that wrong leads to all of the bad things, and I think that's why humans essentially are every organization, doesn't matter how big they are or small they are. And actually, it doesn't matter how much AI or how little AI, it's like shifting people's behaviors and shifting people's beliefs is very difficult. But Fernanda, do you have any thoughts on that?
Yeah, I think it's an interesting one because I think an important distinction we think about a lot is separating the AI as in the products that are using Gen AI or ML systems that we're building, and then how we're bringing those workflows into our own ways of working. And, in the sense that we should be dog fooding, right? In startups, eat your own dog food, make sure you're using the product, but also make sure you're using these systems to understand. Because just to pick up on another thing on trust, I really believe we're living through a fundamental paradigm shift in how people change their interactions with technology. We were just talking about voice, right, as being a new paradigm. How do you build trust when you can't look at a screen? And as those shifts happen, how is that going to impact the way companies build trust, the way consumers shift their expectations of what we're building?
Yeah, and that is fundamental to how we are as humans, as you say. It's how do we interact best? Actually, is it written? Well, written is pretty clinical, isn't it? And actually, is it written in a certain tone for us to break down and understand? I mean, that's a big part of the barrier of financial services right there, right? It's a lot of people using fancy words to make them feel clever, or it's a fear of the regulator to make sure that actually they don't get into issues later down the line. But actually, human consumption of communication becomes a real problem. And, you've got a challenge there. Am I more scared of the regulator, or am I more scared that an organization is going to come along and do it well, and therefore my customers are going to leave to a more human-centered communication business? I'd say arguably that's why all the fintechs have been so successful, really. There's some features and there's some capabilities. The fintech challenger banks particularly, there's some great features, some great capabilities, but most of it is just talking to humans like humans, really. And back to that point on trust, Megan, building that out again.
Well, something I just thought of as Fernanda was speaking, actually, that's quite interesting, is so when I started Starling, I remember Anne would explain that she went through a period post-financial crisis where she's a bit embarrassed to tell people she was a banker. Because, bankers were not perceived very positively. They were kind of seen as, not having people's best interest in heart. And,
5 years, I told everybody I worked in IT. It was weird.
Yeah. And I kind of I forget that sometimes because I kind of missed that era of banking. But I do think there is still a lingering element where sometimes we mistrust banks or humans, but actually technology, I think people generally expect it's not a mistrust of the technology. They expect it to be objective. But it's more around just ensuring that it understands you. It has guardrails in place that you can see what it's doing, that at any given time, especially with something that's automated, you can see why it happened, when it happened. You could reverse it if you need to, that sort of a thing. But I think internally, one way that AI within this framework will be successful is whenever we take the regulatory frameworks that we've applied to humans post-financial crisis for accountability, like the SMF functions. You can be a senior manager, you can delegate tasks, but not responsibility. When you assign that to an agent, it's the same thing, but it should have a human steward. You know what I mean? So that there's still an accountability. So if the AI system fails, it's not all blame goes on the AI system and you roll it back. You look at the systems of accountability and how you need to evolve it to continue maintaining, the kind of level of fidelity and standards we have in financial services. That's trust has to shift now that we have a new way of executing with different agents who are acting.
Yeah, we see that all the time. People are they report in user interviews they're more willing to trust an AI because they don't feel judged. So there's like the mistrust on legacy banks, but there's also this judgment of like, oh, this, successful financial advisor who's got their shit together. I feel like nobody talking to them, and actually an AI is not going to judge me, so that feels safe.
But I think there are moments though, I think you're always going to need sort of like human touch points and human interventions when it comes to financial services and when it comes to people's money, right? I mean, there are scenarios that are really scary, like if you're the victim of fraud or things are happening sort of in real time. And this is really good. I think real time example is how can AI sort of like help to intervene, catch those things when they're happening in real time. But I think when people then are feeling sort of vulnerable, they're probably feeling quite scared, they're feeling quite anxious and worried. That obviously then is a really high impact touch point, I think, where you've got that sort of human intervention. I think you're probably also going to need that going forward as well. But it's how do you couple those two things, right? And how do you make sure that those really high impact touch points are sort of handled in the right way?
I think that takes us really nicely on to the next point around contextual, because I think you're completely right. I think the argument we always make is, the behavior, the context of what somebody's trying to do denotes the way in which to do it. So, sadly, when my mum passed away, loads of banks pushed me towards filling out loads of forms in order to, access da-da-da. And it's like, it didn't feel justified. It felt like they were making their admin my problem in a point where actually all I needed was somebody to help me and deal with that. Similarly, we always say it's like, the idea of a loan being a loan, actually somebody applying for a loan at 3 a.m. is fundamentally different than doing it at 3 p.m., right? So context really matters, and understanding the context of the customer, the behaviors that they're exhibiting, the stresses that might have been coming from that context. These things are really critical to make sure that actually you can serve people in a consistent way, or serving them in a way that's appropriate for the needs that they really have. What do you think, Megan?
Yeah, I think the interesting thing about this is that you're exactly right. Context absolutely matters. It matters in those key moments, like you have, a relative pass away and you're working through the finances. That even as Fernanda said, like you need financial advice and you're a bit embarrassed. I think something that I was really fascinated by when I was doing research for Caywood last summer when I was first starting out is I was exploring how people sought, financial advice, what drove them to it and how that process went. And what I found really interesting is even at the highest levels of earning, a lot of people would avoid getting financial advice because they were just embarrassed to open the kimono. But they would report, like, they don't mind talking with ChatGPT about it because they don't expect to be judged. You know what I mean? And so I think there's this element you need the appropriate advice and the appropriate response at the right time contextually. But more than that, I think the interesting thing about AI is it's getting really good at attunement, recursion, emotional intelligence, to be able to understand where you are emotionally, to meet you there in a way that I think we didn't really expect, the ability to have a conversation and to be able to respond effectively. But more than that, I think there's a really interesting dynamic that's playing out where I think it's exactly as Ross said, where there's a relationship between AI and whenever it hands over to a human. And China's done this really well in the US. They have, they've been working on their AI integration over the past year, and they've done it in ops and customer support. And they have a really neat system. They've ended up reducing their ops cost by 60% while also doubling their NPS score. But it's because they have that relationship really nailed down of like, where do we start with AI and when do we need a handoff to a human, where that's the right path to go instead. And I think that's the future of it, because you need context, you need emotional intelligence, you need to meet the person where they are. But then also, is the automated or the agentic experience isn't right, when does a human need to step in to pick the baton up?
Yeah, one of the things we use at Cleo is this framework around proactive and reactive jobs to be done or conversations. So when a customer comes to us with a very specific job to be done, we need to identify that, the AI needs to identify, and then use intelligence to send them down the right path. Versus they come in, they're engaged, they've satisfied their job to be done. How do we then be proactive about showing them that just-in-time behavior, right? And so we think of these as two different problems to be solved, and making sure you have the right one at the right time so we can measure their success differently.
Yeah, that's interesting, isn't it? Solving a problem that people are aware of versus solving a problem that they might not be aware of is fundamentally different in the way in which we approach the communication around it, isn't it? So, and most of, I guess, in this world of trying to financial services, I always joke, it's like financial services is the thing that we all care about, but nobody else does. So it's like, customers will engage with it as little as possible. So actually being able to talk to them about things that will be good for them, even if it's not something they want to do, is an interesting challenge, isn't it? But that's where the human part becomes so important, because, obfuscation through, long words and, confusing percentages that people don't really grasp. Like your point, Megan, around, ultra high net worth or high net worth individuals, just because they've got loads of money doesn't necessarily mean that they're going to be good with money. So it doesn't mean they're going to just want to, sit down with an advisor and talk about it all day. So how do we strike that balance here? Is it a one-to-one personalization of terminology and the way you want to engage with things, or is there a little bit of professionalization of that needs to? I'm not saying mine just needs to be emojis and calling people dude, but actually, if they want to engage with me, it's probably going to be more at that end of the spectrum than it is the bowler hat.
Well, the other thing is, it's like an AI doesn't it doesn't have finite resources like a human does. So a human advisor is going to be serving lots of clients, and they can't spend all time thinking about you. And in the middle of a financial crisis, they're probably going to be managing multiple things that are happening, not just meeting your psychological needs. Whereas an AI obviously has infinite ability to meet everyone everywhere and to be able to focus on each person with 100% of their, capacity. And so I think what's really interesting is when we talk about context, it's not just understanding what you need and when you need it, but being able to know you so well that it knows the questions you haven't thought to ask and what you could be doing. And I think that gets to Fernanda's point of what can it tell you that you're not even aware of? Because, it's one of those things where a lot of people now can access products. It can be real time and everything is very accessible. And yet a lot of people don't know what to do. And so they don't know what products they need, what would best serve them. So I think the contextual part is also understanding so clearly where you are, where you're trying to go, being able to surface those things to you, help you find the right paths, in addition to having a rapport while you do it.
I'd love to build on that because I think what we found really interesting is we absolutely do need to meet people where they are. And as Megan was saying, present the right thing at the right time. But we've also found that having a very strong point of view on our brand and tone of voice has been incredibly helpful in becoming recognizable and becoming something people come back to. So Cleo famously has the personality of a sassy big sister who tells it to you like it is. And, very intentionally, we're upending that trope of the subservient female assistant, but rather someone who knows what she's talking about, who's building trust, but who's not, she's not scared of roasting you and of kind of bringing you along on that journey with her. And we found that approachability incredibly successful in how we engage and become, in that sense, more human.
Yeah, it's an interesting tone to create brand in a fundamentally different way, isn't it? Because, brand experience and the tone of a brand and it's not just the font you're picking or the colors that you're doing for your palette. It's how you make an individual feel from the experience of engaging with your brand, isn't it? So that's, but in this opportunity, it manifests itself in such a beautiful way because you're doing it conversationally. Therefore, you're able to establish trust, as Megan said earlier on, in a completely organic way, rather than just some spending loads of money on above the line and doing sponsoring a football team or whatever. Actually, you're able to engage with people in the way in which they want to be engaged, can't you? Sorry, Ross, I cut across you, mate.
No, I was just going to say, I think Cleo's the perfect sort of example of someone that's doing the sort of the tone of voice and that sort of engagement piece really well. But I guess what I'm struck by in terms of everything that we're talking about is, I think we know that people, we all do it. I don't think any of us are very good at consistently doing the things that we don't feel like we're very good at, right? And so I think when it comes to managing personal finances, I think maybe on the day-to-day level, but then also sort of planning for the future, retirement, all of that sort of stuff, that's just the stuff that we probably all feel like is way out of our league, right? But then I think, Megan, your point about people still won't engage a financial planner or a financial advisor, even though they know that that's going to get them to a better place, because they do feel maybe out of their depths, or maybe they don't know, they won't know what they're talking about. I think that fundamentally to me comes down to there is still a big gap but on all of the things that we're talking about, like real-time, intelligent, contextual, like David, you always talk about sort of, we call it financial services, but really there's no services. It's just a collection of products, and everything that's supposed to sit across the top in terms of that intelligent layer just isn't there, right? And so, again, I think there's, not circling back too much to the point I made at the top, I think AI has huge potential to transform all of this, but it has to be embraced in the right way. I think digital, that sort of first wave, had huge potential to disrupt it as well. But have we embraced it in the right way at scale? Right now, I'm not sure.
I feel like that's probably a very perfect place to, like, I feel like Ross is dropping the mic in 2026 immediately, which is awesome.
Sorry,
but I guess to that note, we've already really seen how AI is shaking up customer experiences and product design. We're stretching the limits and really what digital riches means in this construct. But what we're going to do now is take a quick break. But when we're back, we're going to zoom out and tackle the bigger picture. How can AI supercharge digital riches while navigating risk, resilience, and the future of a truly digital financial services industry? Be back with you really shortly. Hey folks, David Brear here, CEO of 11FS. Here's something you might not know about me. I get a lot of people trying to impersonate me online, fake profiles, scam emails, the lot. And a big part of that comes from data brokers, hundreds of them, quietly collecting and selling your personal information, your phone number, email, home address, job title, all out there and all fueling identity theft, scam calls, and spam. If you've ever searched your own name online, hands up, who hasn't? You'll know how exposed you really are. That's why we've partnered with Incogni. They contact 230 plus data brokers and tell them to delete your information properly and legally under GDPR and CCPA. Doing it yourself would take hundreds of hours. Incogni automates the whole thing and keeps working with repeat removal requests if your data reappears. I tried it, and within days, saw brokers deleting my data. You can even protect your family members too. Fintech Insider listeners get 60% off an annual plan. Just head to incogni.com/fintechinsider and use code FintechInsider. And yes, it's risk-free with a 30-day money-back guarantee. You'll find the link in the description. All right, folks. So we've established how AI could really supercharge riches, but let's take a look at how it could really be applied in 2026, and near or far how the opportunities outlined in part one become a reality. I guess, I feel like we're in a workshop at this stage where basically we could run off for the next 5 hours on any of these topics in any particular direction, right? But Ross, kind of building on your point from part one, the bit that we didn't cover in riches is like the social construct, but money inevitably has been kind of genericized and sort of put into this kind of fear bucket. But fundamentally, the reason why we all work and the reason why we want to, acquire this thing is because of like family and things we want to do, and the, paying kids pocket money and, saving for the future and doing money has context to it, doesn't it? And actually, I feel like financial services is taking all of that. We say the digitization kind of took away all of the feeling from money. But how do we see that going forward? Do you think the advancements that we've got with AI and everything in the way in which we engage, do you think that can come back? That's a big question, isn't it? I'll see you in an hour when you've answered that one.
Yeah, let me go do some homework and I'll come back. No, look, I think money and finances are inherently personal, inherently social. And look, completely to your point, we all do what we do week in, week out, so that we can have everything that you mentioned about family, different experiences, holidays, all of those sorts of things. I think holidays is a really interesting space to look at when you consider it in the context of AI, and then maybe finances as a sort of enabler within that. You've got people using ChatGPT or various other services to book sort of holidays almost end to end, right? Sort of get to know me, get to know what I enjoy, get to know what type of holidays we've enjoyed in the past, book this great experience, and then sort of maybe what are the different ways that I can save money on the in terms of when I pay for the holiday, maybe use a VPN to automatically book the flight so that I save hundreds of pounds because I'm booking from India rather than the UK, or, use the right combination of rewards cards so that maybe it means that I can travel as a family, we can travel business class versus standard class, like whatever that looks like. I mean, there's huge ways that AI can be used to sort of automate a lot of this stuff really based on your sort of individual preferences. And actually it becomes part of a much bigger end-to-end journey, enabling the types of experiences that you're looking for as a consumer. I think there's huge potential.
Yeah. I guess on that, Megan, we're sort of we're at a tipping point, really. We're at a point where it's not just about, we used to do Google search result pages in a certain way, and now information's being presented back in a different way. It's actually, we're at the tipping point, as Ross said, about not just information, but action, right? And actually that then takes it into a whole different world, doesn't it? The sort of concept, I think me and you've talked about this on stage before, but the concept of sort of self-driving money, where it isn't just here's 5 decisions you can make, sir, but actually here's the ability to hand over the reins to artificial intelligence, or intelligence digital services, whatever you want to call it, to actually do things on your behalf. Like that's got to be a game changer, isn't it?
Yeah, and I think it's the perfect storm for it right now, because we see the great wealth transfer with the 60 trillion coming down into a younger, digitally savvy generation. And then you see this generation being willing to use digital tools to manage it. You see them also not having huge amounts of financial confidence and not wanting to go through even fast manual processes. So I think it creates this kind of like behavioral storm where people are craving exactly what AI is providing. And what AI comes in and can do is it can provide this holistic understanding of being able to take in your data, integrate the APIs, take in documents, take in all the things to understand where you are, talk to you and understand your goals and where you want to go, and also help you think through things that you just haven't thought of before, asking better questions, and then creating that financial plan. But then that's where you get to that money on autopilot, that self-driving money, where then you can create this framework where then your AI knows what you're trying to achieve, and you can enable it to actually execute on that and just do it. So it's a CFO in your pocket who acts. It's not just make it easier to open my new ISA. It's like, just go do it for me. Yeah. And so that's where, at first when we talked about this maybe 5 years ago, it was all like the kind of boring, low-hanging fruit, like I really hesitate to say this because there's entire companies built around this, but like manage my utilities, within these 5 providers, if you can switch me and save me at least £100 per year post cancellation fee, there was like the process where it can actually sign new contracts on your behalf and move you. And that's great. Just run it on autopilot between like BT and Virgin, whoever, my Wi-Fi is, so I don't care. Just use one of them. Those types of things are easy to delegate. But then we kind of work up the food chain of financial services, financial products. And then you get to this kind of shared experience where if it's your mortgage, you don't necessarily want your AI to just remortgage you, but it can say like, hey, you're up for remortgage. You can either stick with it, you can just let it expire and switch to this rate, or you can switch to this new provider. And then within that shared kind of decision-making, tell it what you want to do, and then it acts. But you're effectively getting to this place where certain things can just happen automatically in the background that you're cool for it to just do on its own. And then another one where you have shared decision-making, but then it does all the execution for you. And I think that gets really meaningful at helping people manage their financial life, decrease their financial anxiety, spend more time on the things they love rather than the administrative burden of like financial management.
We're literally working.
Oh, go on after you.
No,
I feel like you're about to spill your product roadmap, so you first.
You're basically describing our product. Yeah, I think...
you stole my product. I'm kidding.
No, I think it's such a big problem, right, that so many people are tackling. And I just wanted to share a bit of research on what we're seeing, right, with customers on this. And we're already seeing a significant minority that are happy for AI to act, as long as there is explainability, as long as there is, up to certain thresholds, the potential to undo what it's done. Majority still prefers confirm to act, but we're already seeing that shift where you don't just want a recommendation, you just want the ease of the work's been done, just press this button. Or for these things, actually go ahead and act for me, and maybe there's an undo button. And I really think we're going to see that shift go up the food chain, so to speak, as we build trust, as we get used to these more agentic systems.
We've done some research in a similar space, Fernanda, around open banking. And I think where open banking was really successful was giving you that sort of holistic view across your accounts. But then I think where the sort of levels of dissatisfaction or disappointment came in was okay, well, what next? Right, I kind of understand my finances a little better, but what are you now going to enable me to do? And I think that's potentially also an interesting lens here, Megan, to steal your phrase around working up the food chain. Some of those financial products that have typically been considered sort of maybe more complex. I think, we're starting to see, as well as that sort of more sort of like money on autopilot, set and forget. And I know I'm sort of like heading in a good way. People actually using AI to build sort of financial intelligence to become a little bit more hands-on. And so I think we're seeing, an uptick in people using AI to help them pick stocks and sort of better manage their portfolios and all of that sort of stuff. And I think that's another, as well as the automation, probably slightly opposite end of the spectrum, but also another cool lens.
I was going to say, I guess, it's been quite light-hearted. It's been quite jovial. Like we're all excited. Like this is great. We're doing exciting things and it's changing the world and blah, blah. But I guess just touching on the points that all three of you have just made is like, this actually fundamentally shifts actually how people will acquire products. So back to your point, Megan, I mean, affiliates and comparison websites existed because actually insurers hoped that you wouldn't notice that your premium went up by £400. Do you know what I mean? They started doing it with savings accounts because people with dormant, 0 point nothing, savings accounts were making up most of the book and the banks didn't have to give away a lot of money, right? So actually it starts to shift the fundamental business models of these, where actually if something can automate that and make sure that I'm getting the best one, then it kind of eradicates the way in which those organizations sort of slightly predatory make their money. And that's going to be really interesting because, when we first started talking about this, it was, moving some money from a savings account to a current account to avoid a overdraft fee. But actually, when it can start to automate your financial life in a way that you're always optimized, but that will come at the detriment of the profitability and the revenue of the organizations that create those things. We're kind of getting to that classical sort of manufacturing distribution piece, albeit not in a factory creating something and sending it to your house, but fundamentally the people who manufacture financial instruments and the people who orchestrate financial services, and that's fascinating. Like I feel like we're going to need another 4 hours just to kind of unpick that, but because really that gets to a whole different world. And I think the big question that comes there is then who is best placed to provide those orchestration services? Is it somebody like you, Fernanda, or you, Megan, or is it traditional financial services players? Because actually the challenge with being either of those things is significant, albeit very, very different. I don't know who wants to start on that one, but I feel like we can't give it justice. There's going to be a part 2 of this podcast at this point. Let's just admit it.
Yeah. Well, yeah. So my thought is actually that there's a bit of a debate over like who will lead this. I think to your point, David, like, is it the incumbent? Is it the startup? Like, which angle is going to dominate this part of the market? Because when the agent comes in and understands your finances, helps you understand what you need to be able to access it, it builds off of Ross's point, which is open banking was centered around giving people awareness of their choices. So you can see all the different options, see where your money is going, be able to compare and contrast, and be able to more easily access the products you want. But now with agents, it's not just being able to have that information, it's being able to access it easily. And it's not just whatever your own institution offers. Ideally, it's, looking at across a broader set of options in the market to find you what's truly best for you. And so that's where the debate comes in of like, will it be an incumbent or will it just be everyone has their own agent, like full stop across everything? Or will it be someone like Cleo or, someone else that effectively swoops in from the fintech angle? My prediction actually is that because agentic AI is about execution, it's no longer about the beautiful user experience. So actually what Starling and Monzo and others created as a really unique differentiating edge, which is brilliant user experience, it kind of goes out the window because it no longer matters how beautiful and easy it is because you're not using it. So really, in some ways, I think the incumbents have a brilliant opportunity here to leapfrog. Like, well, I have more customers still, and I have all the data. And so if I can clean this data up and build a really nice agentic experience off of it and not worry about undermining my own revenue streams by giving people access to others in the ecosystem, they could actually build something probably the most powerful. And so that's where I think it's really interesting because it's all about intelligence and execution and trust. And all of that an incumbent could build really well. But I mean, it's an open field. Anyone can, I think it's all fair game for who's going to do it best. But I do think it'll be about navigating those three things well, like understanding the context, having the trust, being able to access any product in the market, and being able to do that in a really intelligent, real-time way.
I just wanted to build on that and say that I don't even think, I mean, on the incumbents versus disruptors, I agree it's anyone's game. Of course, I'm on the team of the disruptors, but I think it's interesting, the distinction between the user experience and then the agents and the tools that power it. What I wanted to say is that I don't think it's just financial services, right? Like Ross was talking about travel. We've already got dynamic pricing. Recently reading about Walmart showing people different pricing on the app. If their GPS shows that they're in store, they have a different price than another. So like dynamic pricing is starting to happen. And at the same time, you could have agents that are there scouring the internet trying to fight the agents that are creating these dynamic pricing. And so you have advocates on your behalf, and all these interactions start to happen offline.
I think a really interesting lens on this is, I guess it kind of comes back to that sort of like internal culture piece and sort of, I suppose, the interpretation of where we're at right now and then what's coming down the track, right? I think fundamentally the shift that we saw in 2008, post-financial crisis, was, I think, the trust that the general public had in the sort of big incumbent financial institutions kind of shattered, right? And I think so that's where I think you started to see like the disruption that we've seen over the last sort of 15 plus years. I think really fundamentally, a lot of it has come from that. Now, my worry is that if you look at a lot of the incumbents, I think they were totally caught off guard by the Monzos, the Starlings, by the Cleos, everybody else, because they maybe misunderstood that shift. What I think is really interesting if I look at the landscape now is I think a lot of incumbents, again, are still maybe missing the point a little bit, because I think they kind of feel like, oh, Monzo, Starling, Revolut, they were really scary. I didn't know what they could become, but actually they've kind of just become a bank. And we know how to compete with banks. And so it feels like the landscape's settled, and so we'll just keep going as we are. But I think that, again, fundamentally misses the point, right? Because everything that we've talked about right now in terms of the potential and the really fundamental transformative potential of something like AI, the next wave of disruption is potentially 10x, 100x, 1000x, whatever that is. So again, I just think it comes back to that culture point and how ready they are to sort of embrace that in terms of what's coming down the pipe.
Like I say, I think we could probably go for another few hours on this one, but just to kind of reiterate what you guys have just said there, because this becomes really sort of fundamental to like the next 10 years of where financial services goes, right? Actually, if you listen to what Megan just said about every big bank was able to kind of put some creatives in a corner and try to emulate the likes of the Revoluts and the Starlings and the Monzos, and they put it off as a creative thing, like a different customer experience touch point. But actually, the impact that artificial intelligence has and the real time nature of the changes that we're talking about, very quickly there'll be a boardroom conversation where somebody's like, "Well, should we be surfacing the fact that they're on a bad rate?" And actually, if you decide that you shouldn't, then you're in a bad place when it comes to the trust of the customer, and that'll get surfaced really quickly. If you decide that you do, then you're fundamentally eroding your business model and actually where you go to. So it is really exciting to see where this goes. We will definitely get everybody back again to continue this conversation. But for the sake of everybody's diary, we're going to have to wrap up right now, I'm afraid. So that does wrap up today's discussion. A big thank you to all of the panelists and for breaking down this is a very important subject with me today. Thank you so much for joining me. Where can people learn a little bit more about you and your company? Fernanda.
Sure. I'm on LinkedIn, and you can go visit meetcleo.com to find out more about us.
Very good. Megan.
Yeah, LinkedIn, Megan Caywood, or Caywood.ai for my company.
Very good. Ross.
Ross Gallagher on LinkedIn, or 11fs.com/ventures for all of the interesting stuff that we're doing on the consulting side of the business.
Very good. I'm always lurking on LinkedIn. You can find me over there. Thank you so much for listening. If you like what you heard, follow our podcast. Don't forget to leave us a review. It helps us make it better, and it helps other people find the show as well. As always, if you want to join the conversation, you can find us on social media. Just search for 11FS or Fintech Insider, or email us on podcasts@11fs.com. Thank you very much for joining, everybody. Bye.